Good morning, pajama traders. Happy Monday. Welcome to May, the new month. It's a new you. Now, the market is green. No crash. No no pitfalls. Doesn't look like you're going to need to worry today. Now, a lot of you slept through all of Friday. Good choice. Nothing happened Friday. We traded completely flat on the week. Earnings have been great. We've been beating just about, I think we're at 90%. I think the actual number is like 88.9% or something like that of earnings beat. And positively with good guidance. We have more earnings this week. Things that I'm looking at are more. We have Zillow. I think it's Tuesday. Things like Roku through that space. I think again, there's obviously some sort of, I would say, consolidation being thrown out there based on price speculation. I think PayPal will be interesting to look at. Again, the thing to remember here with earnings, and I'm going to say it a little differently than earnings don't matter, is that we've already priced all of these ideas, right? When we look through anything, we've already priced whatever is really going to be there. Because again, even if earnings surprise or beat or they lose, the price is basically already in a position that it's going to continue whatever it's doing. So let's say PayPal beats earnings here. What is price going to do here? Is it going to just all of a sudden go up 10%? And if it does that make an understanding of the consolidation here? Because if it goes up, let's say on the earnings it goes up like 10%, right, from like that week for this week, then isn't that sort of still in a natural state if we get a breakout, and we'll see the breakout? And so the thing is here is that the price action leading into it, at least since we started earnings, is going to be just a continuation, no matter what. And so there shouldn't be anything this week, and I think we're going to get it more this week, of gap ups, gap downs. Do not look at it as a response to earnings as much as a continuation of the price action we already saw. It's really easy to think that investors all of a sudden change their mind because they saw one quarterly earnings. It's not so much that, right? It's really not that. And that means, for you at least, and for myself, that we don't put earnings bets on, right? We don't put a trade on that says, oh, I think PayPal is going to do good, so I'm going to go buy it here. That's not the reason why we do it, because again, you're just leaving things to chance, and that's not how other people are trading it, right? People think PayPal's going to do well here, or they think, Apple's going to do well. We traded accordingly, leading it into the earnings. Look what Apple did. Apple blew through earnings, right? Because we already traded it up. We already knew that, right? And so then why is the price down since earnings, right? So again, these things don't matter when the earnings comes. It's everything there before, and then how we continue thereafter. A lot of the decisions that need to be made and how investors and traders are making decisions is based on the guidance that comes out, whether they should keep pushing that position or not. And that's why we get things like take profit, and then based on how people are trading in that moment, maybe it seems like we've already gained enough from that entry, and so we'll take profit to go enter something else, opportunity cost wise, right? And so this week, I think, now that we've got out of the bulk of earnings, and now we're going into some of the, it's not so much smaller, but it's lesser of importance after we've gone through some of the big banks, through some of the big tech. Now it's kind of like, okay, let's see if everyone else is up to par, and if yes, then great. If not, this again begs the question, is the market just going to keep turning or not? And this is where, does it so much matter if we meet the standards of earnings here? We've already seen everyone beating, so that's sort of already expected. Does it even really matter if price is going to continue to trend up? Aren't we just continuing to buy shit anyway, right? Aren't we just buying things because we have a belief of future growth, of inflation? Does it really matter what this quarter meant? It doesn't. Everyone knows that. Everybody knows that. And so this week, we had some sideways trading last week. Again, we're going through earnings, but overall price has increased, right? And this is where it's kind of hard to look at this average, and we are trending up still. It's really hard to see it here, but this is trending up. I mean, however you want to say, oh, well, from Monday to Friday, it was the same price, almost to the dot. True, but from the week before, we're up. And so, again, we've traded all-time high every day, and we've seen that price action. We've seen sort of that paint drying effect of watching price on the average, but then we see very contrary price action on individual tickers that we have been able to capture, right? And this is, again, we've gone from in here was that you could pick any stock and you would be just winning, right? You'd be making money if you went long. We've now re-entered a bit of a realm here where we can start to see the effect of picking tickers well and trading out of breakouts and trading those which are going to be more bullish and continue to push here in really the momentum effect, right? Those tickers that continue to generate momentum and continue to trend through here, they actually continue to pick up more momentum, right? And that's where everyone's already long. And if you're going to add more and you're going to buy more, then you want to buy something that you believe you're going to miss it. You need to get in. We're seeing that in a few different areas. I think the value side is certainly showing this where we continue to trend things like BRKB, right? These kind of things. Again, I talked about from last week that coming into this week, we're gonna have a lot of trades. I think that in hindsight, we go, why didn't we take that trade? It's so obvious now. This is probably a good example. The value side is the best example that we have, right? Is that it hasn't stopped trending. There hasn't been a week that we haven't gained, and this is where you can look at day-to-day action and be like, oh, we're down 1% today, now we're up 1%, and it seems choppy back and forth. But then in hindsight, you go, wow, that's literally a straight line going to the upside, and that's where we sort of have taken this repertoire of, or this sort of bias of the best day to enter was yesterday. It's certainly true, and we know it's true, and it's going to continue to be true for quite some time. Now, whether or not we get some rotations after earnings, based on once everyone digests things, I think again this week will be more digestion, so we'll at least get a hint towards what investors want to be transitioning to. It really should be further into value, right? That's the most obvious route, based on all the economic data that we've seen, is that okay, growth is growth and will continue to grow, but value is going to get the most right now sort of gain because again of inflation and economic spending. I think we need to watch the political sphere a little bit more. The 4 trillion out there that Biden's proposed. Uh, I don't know if getting it done quicker so much affects the speed at which the market's going to trade. We'll have to watch for that a little bit when we get into some of the again, when we get towards some of the votes or some of the talking, and when they sort of readjust the plan. It's really specific to what sector and what companies are going to be getting that liquidity and that cash to go spend and do shit. Again, we've already entered that, and we've already priced a lot of this. The super cycle word keeps getting thrown out more and more in headlines. If you see that underlying commodities increase is it's causing a lot of things right now. And again, this is due to inflation. And again, inflation is affecting commodities and these other asset classes a lot quicker, like things like crypto, right? Crypto is a hyperinflation. It's not so much. Again, you can put like the Ponzi scheme and it has no value sort of thing on it. But if someone's willing to pay more, we're going to keep trading it higher. It's really still more inflationary, just like commodities are, right? When you look at commodities, we can joke about corn futures and orange juice and lumber. These things continue to appreciate because of the cycle that they're in, and it's very hard to slow those down because it's not like you need increased demand. You can consistently have the same demand. It's the feedback loop it leads into, the other side, where for instance lumber leads into housing, but we have a housing shortage. And so at the same time that lumber is increasing in prices, it increases the pricing of houses, which at the same time there's a shortage of supply of houses, so prices are going up. And then you have this also other event on the other demand side where everyone is cash heavy. And so due to liquidity from the way we sort of entered a recessionary phase, came into a boom, the timing here is that people are willing to pay money up front and a lot of cash. And then at the same time, there's no damn houses. and you get to build houses for the number now is $36,000 more on average, right? And so that then leads back to the lumber price commodity. You have to increase manufacturing. Where do we see this the most and the most effect on the market? Semiconductors. Semiconductors. We have a major shortage. We have to ramp up manufacturing. What's the issue? All the materials to make semiconductors are expensive as fuck right now, right? Because we're in a super cycle and inflationary pressures are causing those prices to rise, which in connection with a supply shortage of those materials to begin with, again, we are entering this it's almost when you enter a contraction, which is going to lead to a boom, right? And it can sometimes look like it's maybe the start to something possibly crashing or prices dropping. It's that sort of tightening, right? That we know tightening in this moment and in this mood leads to a lot of upside. And that's where sort of my theory on semiconductors, right, comes in, is that this is some bearish action, right? There's been a lot of negative sort of news coming since earnings last week around the shortage, and we have world governments trying to address the issue. Significant spending come out. This sort of, again, think of this less as bearish price action and as tightening. This sort of leading up to some sort of burst, because again, it it has to be. It has to continue. If these companies don't grow, then the rest of the companies can't grow. And this is where that chain and that sort of idea of integration comes really important. And that's why I think Apple's starting to vertically use some vertical integration and create their own conductors for their own products. Because again, look at the genius of Apple, right? They started making their own chips like a year or two before we entered this semiconductor shortage, right? They obviously fucking knew, right? This is why we listen to companies, and if companies are buying back, we listen to them, right? Google buys back 50 billion at all-time high. We're going to listen to them. We're going to believe their price is going to go higher. They know more than we do. And so like Apple vertically integrating before semiconductor shortage, wow, everyone else is going, well, fuck me. Like, good job, Apple. Who would have thought the largest company in the world would, again, these things are pretty straightforward in hindsight, of course. But we can use that information now to say, this is tightening, and this is a space that has been bullish, but now since entering this area is very, people are scared. They don't really know, and that's where we come in, because we're quick. We can be wrong. And if we're wrong here, we can get out very quickly. Investors can't do that. So they're not going to be able to, they're either going to be holding this position, right, or buying more. They can't really sell out of this position because again, it's not like it's going to lose value. It may just stop growing, right? And so unless there's something better. So I think we're going to be watching this a lot. There's nothing from earnings that we'll be able to get from it. It's just going to be sort of a time. It's going to take time. This is where we can just get technical, trade it based on technicals, swinging it back and forth. We may just get swing from support, every couple weeks or something. But I think this is a very easy sort of concept that we could just continuously use and understand. It may be difficult trades, but it's easy on the mind to think about why we're doing it, right? We don't have to convince ourselves much further. So something we're looking at there. The bio side with pharmaceuticals, I think the Myrna play has really shown the importance that's coming here. I think we keep up the buying here. I've introduced some more bio charts. When we look at the overall sort of sector itself, it's shown that, at least through price, that there's some sort of expectation that it's more important now than it was before, right? Think about when vaccines were coming out, we had a lot of speculation, right? And so we had a lot of, we had a lot of sort of price increasing based on who was going to be the players. And then once we knew who the players were and who was going to be producing vaccines, it then came out to the actual numbers, like how effective, right? So we leading into the effectiveness of vaccines, we got the next ramp. And then as soon as they started producing, prices started to fall, right? And started to enter this phase of what exactly is going on. And then the market was consolidating, right? We already priced all of these vaccines and the pharmaceuticals creating the vaccines, and we already know how many and how much money they're going to make, right? And so we price that. That's probably what this high is, right? We price that. Market was consolidating, swings back and forth. Here is the decision, the sort of the deciding factor is if prices are going to pass their all-time high on these pharmaceuticals, that is beyond the vaccines of right now and beyond everything that we've already priced. Now, I think that these prices continue past here, which again is it's not so much what the market's pricing, at least from back here when we started to enter these. Continuing to push here is going to be worth it, it seems like, on most prices. Now, again, market effects could affect the look here. If you look at the entire sector here, it's very bullish. Whether we're getting pricing because of future speculation of maybe preemptive vaccines, right? We just sort of amp up spending in R&D and government funding. I think that's what a lot of it is. We're going to keep an eye on this and maybe pay attention to the long trades being entered by institutions, because they're going to know a lot better whether there's information out there or not. It's more government based than the individual company, and so it'll be sporadic and spread through the different tickers. I think there's a lot of money to still be made here, and it's again up here as a sort of, I don't want to use like inflection point, but it's definitely a deciding factor of whether or not this is going to be a space that matters still. Because again, when you price something in completely, it's hard to really see how it goes further from there. And I think that's what most people see in bios. The thing to add in here that I want to talk about for it has something to do a little bit with the bio space and in general in the market is the retail side, and maybe we can include all of you and myself here, is we had a phase over the last year or so of intensive retail trading, like actual trading in sort of intensive speculation all the time, quick trades, entering and exiting very quickly. Recently, it's changed. We're not seeing that quickness. We're not seeing the aggressiveness come out of retail, and it's hard to find retail. We used to be able to be like, oh, there's retail. I can see it because just the way the trades came in and the way the option volume. The question I have here, maybe we can all answer this together, and maybe we'll figure it out together at some point, is retail just tired, or are everyone went back to work, right? Everyone went back to work, so they're not on their phones trading or not at home on the computer trading as much. Is there something there that, again, most people did go back to work now? I'm sure that has a lot to do with it, right? I'm sure there's a lot to do with it. We didn't see many people use their stimulus checks to trade in the market. Then I think that's going to have a larger effect than we really think, because when we sort of, and this is again where think a little bit of what I was saying here of we're going to change into a longer term trending situation instead of that swinging back and forth. If there's no retail traders and it's just institutions and professionals, it's just going to be a straight fucking line, and we're just going to trend the whole thing because no one's going to exit anything, and we'll just all appreciate prices and push it up together. And when we need to take profit, we'll put it on retail anyway. And so if there's no retail, there will be no swinging. There's no game theory. There's nothing to be done. And so there is a question to be begged of, is there just no retail trading anymore? C Trader says trading coins, absolutely. When you look at the crypto space, and this, we can have this discussion in a moment as well, but just for equities, it does seem like retail has been removed. Now, here's the problem, is we don't have the numbers. No one really has the numbers. We were just under 25%. 25% of all volume was retail traders. There's no way it's that high anymore. They may still be within the market. Ecto says like passive investing, and that's definitely another thing, is that they're slower. Again, think about maybe what happened here is that most retail traders lost money. Probably like 95% of them lost money in the equity market. Let's be honest. Probably 95% lost money actively trading, right? Maybe they did shift into a slower time frame and have just sat. And they realized that if I just sit in here, I'm going to be up in the next couple months instead of losing my money day to day, right? The day trading phenomenon that it takes like 2 YouTube video clicks to realize these people are stupid. And you just go put the money in and you make money, right? That certainly could be. But then we would see inflows into vanguards and ETFs, right? I don't think we've seen so much of that. And so maybe, yeah, maybe it's all crypto. Now, we can definitely talk about this because this is very interesting. Ethereum has basically um, decoupled from Bitcoin, and sort of the altcoins are taking a lot of the demand from Bitcoin. Now, I talked about this uh, just recently. Of Bitcoin is no longer even 50% of the crypto market. It's less than 50% of the market now. Which this is where the institution question comes in, and why I still haven't entered over here. And this price action looks very good, looks healthy. The setups here, institutions care more about the monopolization of this asset compared to the rest, because they're not going to go trade the rest of the crypto. They're not gonna trade altcoins and shit, right? And so here's again the whole Ethereum thing. Maybe can I get this chart on here? Here. This right here, right, is this price action is completely different. It's completely different, and I talked about some of this based on some of the research I was doing and looking at the data. This whole thing and the way this is working is because of all the derivatives. The derivatives are pushing this up. So all the NFTs, all the different coins that are connected to Ethereum, the way the gas prices work, the way the fees work, all of this not underlying, but sort of the derivatives of this coin are pushing this price up. And the more those pick up, the more this pushes. This is not so much people just directly buying Ethereum. It's literally them doing other things, which they're going to need to buy this, but they're spending it, right? That is completely different to Bitcoin. You don't buy Bitcoin to go spend it on something else. This is all spending, buying and spending. And when they spend the Ethereum, it goes into, again, that other company. So let's say they're buying an NFT. That Ethereum then is held, right, by another company that sold whatever this thing was. You're having constant buying and then new executed trades and then holding on the other side. And it's this constant sort of cycle. I mean, this is probably one of the more fascinating sort of things, and actually has a direct sort of ending point, which you can find in terms of supply and demand, because at some point, you're not going to be willing to spend the money to buy the Ethereum to go buy the derivative, right? Let's say if you're buying an NFT and the NFT price has increased by $10, but you have to go buy the Ethereum, so then it costs like an extra 20% because you have to buy the Ethereum, and then you're doing these conversions, right? You're having a situation where the Ethereum is increasing so fast, it's increasing the prices of the NFTs really quickly, and so now all of a sudden, how do you price the derivative? People don't know how to price derivatives. Supercomputers are barely even close enough to price complex derivatives. How do you price a derivative like an NFT that's already based on speculation, right? And has no real value, which requires this other sort of, we're not going to use currency, but this other spending platform. You have to convert it into Ethereum to then convert it into some other fucking God knows what, and you have to pay fees for it, which then drives mining of this. We're reaching some very fine lines of what exactly is possible in this space. And when we look at sort of the derivative side, we can see that the sole problem is the pay to play nature of all of the derivatives, and from this is fucking a waste of my time and boring because I can't play because everyone else is sort of hogging all of the supply, and everything is so in demand that not everyone gets to play. And if you don't get to play and you're the one kid that doesn't get picked on the basketball team, you're sitting there, you feel like a loser and you go leave and you do something else. I would say that's the one problem here. There's no other problem here. There's no regulation problem. There's no losing like the steam of like buying here because of speculation. I think it's literally the problem of all the derivatives is that eventually everything is so in demand and there's not enough supply that people stop. And then as soon as everything stops, it's all those companies that own Ethereum, they see the numbers first. So those big wallets out there of everyone that's been these companies that are collecting Ethereum based on there's basically the selling they're doing, they're going to see that their volumes are dropping and they're going to start to sell. And you know what happens when they all see it at the same time? They all sell. This could go to fucking 30,000. I don't fucking know. But there is an end in sight, which is not the same as Bitcoin. Bitcoin doesn't have, Bitcoin's just whether or not you think someone else is going to buy it and institutions get involved, right? There's no currency driven or spending driven sort of cycle on it, even if Elon tries to make it as if it is, it's not. No one, everyone knows that if Bitcoin becomes a currency, it becomes kaput because that's not how currencies work. Currency is supposed to be stable so that you can always spend it at the same price, not having inflation or deflationary pressures every fucking day, right? I think this taking so much demand from Bitcoin, it really creates. It's again, I think all of these are very bullish and I think they're great, but it's hard for me to go buy things like Bitcoin here. Like I think Ethereum keeps going. It's hard for me to buy this here when I feel so sort of uncertain, right? Just the now. I just mean in the near term. In a month from now, I'm sure I'll be fully positioned here if everything stayed stable, right? Depending on the price, if things get momentum based, then I'll probably go throw it in there. I won't go put the entire. Again, I sort of entered 10% of my portfolio at that moment, back at 9,200. I sold it all here up at 55. That profit I took, I wouldn't put the whole profit back in there. I'd probably put maybe 25% of that total back in, and then do it and let it sort of ride or whatever is going to happen. I wouldn't put that. It's just too much, right? It's too much to be playing with. It's too risky, right? It's a lot more risky than me going long on equities and at least playing options that I feel more comfortable with, right? So I would say the space is still very strong. I think Buffett's wrong. If anyone saw Buffett's comments, they just had their yearly their anniversary meeting and or excuse me annual meeting, and he made some negative comments about crypto and saying uh, whatever. I don't agree with that, so I'm not that far, but I would certainly. Again, I think it's crazy not to be playing with it, and again, that's why I've traded up that whole moment. But right now, I'm going to sit on the sidelines and just wait because I want to see what others are doing. Right, I want to see what everyone else is doing before I jump back in, which is, I think, the smart play to do. Again, nothing wrong with if you're already in position. It takes 2 seconds to go sell Bitcoin, so that's not the point. I'm more interested in using that money in the now because I don't think I need to sit in Bitcoin for right now. I'll get the gains later, right? I'll use the gains. I'll use the capital now for the gains in the equity market because I can just kind of long term trade that. I can throw a significant amount of money behind anything, right? Long term options, some shares if I need to slow down. So just for now. So we'll see how that develops. We have Powell speaking today at like 2:20 or something. Um, Maybe that's more of a Q&A thing, so maybe he'll get Q&A to get it again. The more he defers to say about anything, it goes to Yellen. So I think that's probably what it's going to be. I don't think it's going to be a Fed problem. It's going to be a Treasury problem. So we'll see. We'll see which way that swings. But either way, new week. Um, I guess the last thing again is just we're watching crude, and we'll see how this continues to develop. We'll see how this continues to develop. Um, there's no reason why it's not. It's still trending towards the upside, swinging back and forth. It's really the only thing that could possibly change from a long-term perspective. Otherwise, we keep the buying pressure. We keep active. I think I really want to be looking for. You see, like travels up this morning, and I really want to keep looking for those. Be on the hunt sort of plays. I think everyone should be, hunting, looking for. Again, we sort of already entered longer term trades. Now it's time to, like we did last week, right? We started taking some of these more aggressive short term trades. We're getting there, right? We're back there. All of those travel trades look very good, right? Those look pretty damn good. Starting this week, starting higher. Um, that kind of mentality is important here. Let's see what we get. Again, no opinions. I have a lot of opinions. You have a lot of opinions. It doesn't matter. It's shit. It's shit. All that matters is price. And I don't mean like my opinion sucks or your opinion sucks, but it doesn't mean anything unless the price says so. So again, let's be reactionary and then also knowing not to react too much, right? You get like again, what if we get a 1% sell day today? What if we sold 1% right now? Are we going to exit all of our long positions? I would hope not, right? But we need to know what we need to be reacting to. So, again, anything can happen here. It's just whether we have a plan for reacting to it or not. And so, again, I think most situations here, we buy any sort of selling that comes in, and we've shown and confirmed that's correct based on a lot of other areas, right? Selling that came in, we bought it, and then price bounced back up pretty quick. Again, it's a question of that quickness is really the question, and so we'll see. Again, the rest of the world was on holiday, so they didn't trade today. So, if anyone was wondering, it's literally just us. So, everyone else was closed. Everybody else was closed. At least all the major exchanges for holiday. I don't think it really affects anything at all. They're as if it's going to change volumes or something. But we don't. It's not like we got some negative news out of China, and so we open lower. Or that may be positive. Again, we've seen all this regulation really fucking over the whole China trade, so that's a hard thing to price. And not having a day here to open up the week could cause some indecision. We'll have to look at what the Chinese tickers look like after today. Again, we have like BABA earnings coming up, and Jesus, I have no idea now, right? All right, let's see. BNTX or other bio continuing trended up to the upside. It's been a straight line. It's been a straight line. All of them, basically, we're all healthcare. We're all healthcare on the. What's moving right now is healthcare and fucking bios. So, again, my tier 2 for the whole year is healthcare. Tier 1 is still tech because nothing can stop tech from being number 1. There's nothing we can do. But tier 2, I've said it since last year's healthcare, and it's proving to be a very important area. And I think it's shared by a lot. Like, look at this price. It's unneeded to have some of this price action. It's obvious that people and investors out there believe that there is further upside here. Like, to the point where these companies and some of these ideas didn't exist a year ago from today, but now they've become sort of, however we want to think about some of these ideas. Like, you can say, well, Bitcoin's up 700% in the last year or something. Like, these things, of course, like Tesla's up 700, 800% in the last year. Like, these things, sure, yes. But we're seeing it in an entire sector. That's the difference. And we see a whole sector, right? What do we get here? A lot of, again, everything opened up. Everything that opened up higher is still there. See, it sticks out. RTA at the or level here. Expedia still within the channel. We'll see what happens there. Retail stores, I'm definitely watching for this week. Again, we sort of failed some of the breakouts that seemed to be there. So we sort of continued the consolidation a little bit. That's most likely all those charts I posted. That top trend line, just extend it, push it a little higher, right? We've seen that a lot of those have kept their lows. That higher low, all those retail stores that sort of slowed down and didn't continue the break, they continued that higher low. So that still means that they're just in that final part of consolidation. May not be as fast of a breakout, but we'll see. Apple coming back from that low, straightforward. Let's see. Quick around the horn of the megas. I will see. Tesla opened up directly is fucking strange to look at. Opening right there connected, but let's see what that looks like. Neo's still holding that level as well. Again, very unclear. Very unclear on the on the on the EV space. We've taken the trades. I didn't take Ford still, but you do have the Tesla Neo trade there. What those look like. FinTech is going to be interesting. It's definitely going to be interesting. No flow on ARC. Probably holding that level from the bid on Friday. BA coming off the low again. I took this BA and GE trade here. I would say this is pretty good confirmation of what I said. What's important is what comes above this level here, on both BA and GA. Now, this is not straightforward. And we'll see what exactly this looks like. Again, you can see all of the Dow tickers up right now, right? And I talked a little bit about this cat move here. When this started to come down, the flow went to the rest of the Dow tickers. Like again, it's not so clear to see, but we'll see what the result becomes. Again, this move down, we try to buy as low as possible, and while doing so, we also buy other components that we think that money went to, and you get good confirmation. Like, look, this is disgusting to look at here, but again, it's not so much about where it is here; it's about what's going to happen beyond there. And if we can get such a good low like that, then I feel very, very happy about buying down there, and sort of if that's going to be my low point, then great, right? It's great. So we'll see what these do, if these are going to come out. Again, it's just a question of, think about every single breakout we've seen so far, right? Everything is looking very similar. It's just a lot of these charts have to get there, right? They're very close, right? This is very close. We're just trying to preempt this move as well, right? That's all we're doing. So the GE move is obviously a little bit quicker. And again, this sector has consolidated the most, so off of its high. RTX has continued. I think that's our only aerospace and defense that after we entered those longs, it continued to push. BA, GA we had to get out of. We got out of SPR. We'll see. This again, it's hard to say the Dow, but the Dow itself, the company, we've seen this sector of chemicals do very well, and I think that's going to be an interesting sort of thing. This is up 2% here. This is the dumbest chart to look at in terms of. I wish there was a way to. I mean, we could use percents here and try to log it. Logging doesn't help though, as you can see. This is a 2% move here. These moves are actually pretty large, and it's hard to look at the candles here. This would be like a good example of, you just want to look at it as a number table, which is strange to think about, but yeah, we'll see. The Disney trade has turned pretty well so far. Again, this is where, again, we're looking at it like this. If we just cut off the rest of the price action, we're just looking at it as this. It's really easy to look and say, oh, we got a lot of supply. And again, this is a consolidation that a lot of tickers are going through, that it hasn't so much, the market's been breaking out and these have just continued to consolidate. I do expect these, whether we want to call them diamonds or just this tightening that's continued, I do expect it to lead into further upside. And so, some of these, I'm just waiting for its, I don't know if it's a moment as much as just the demand has gone elsewhere for a little bit of time here. And Salesforce is terrible, absolutely terrible. It's just trading in this channel. There's just not enough demand. I mean, it's just like the most straightforward thing in the world. I mean, I don't know what it takes to. It's just they put too many points on so quickly and see what happens. It doesn't really affect the Dow overall. UBF coming off. It's our weekly. That's our weekly. I do have another weekly chart. See if I post it. A good start here. Yeah. Fine. Okay. Well, we've gotten started on Footlogger. Let's see if the rest of our retail tickers pick up. I was looking at we just looked at QRTA right at the opening. Start coming through. These are all. This is very good. Again, it's hard to. I don't know. I said it from last week that we had these breakouts and then it led to downside and we had to buy this for the weekend, right? So we took a lot of these over the weekend. Again, if you didn't take these over the weekend, you had to just start to. Again, we talked about these ideas. This is how this works. It's how it's gonna work. But it's hard to look at a breakout and then have it take profit so quickly and then buy it off that low. But again, the red days and pullbacks that's when else are we gonna be fucking buying things, right? And that's where you just have to use some bias and use some the probabilities on my side more times than not in this situation that if I buy here at this low, I'm going to be catching some upside. And so this was like the retail trade that I talked about a lot last week that this does not look great. And it's just use that idea. Oh, this doesn't look good right now. Well, is it going to continue to look bad or is it going to get out of this area, right? This is gross, right? The whole point of these trades is to get out. Now, it may not. It literally may not. But this is a very strong Monday that, based on price action so far, lends to people are warming up to the idea, did their lines in the morning, and we're going to be putting some points on. What it looks like. Again, we just had economic numbers last week, and there was no reaction. There was no reaction on the retail stores, which is basically backwards. It's completely backwards. But we've sort of seen this that we've already priced that idea is the reason why people weren't buying. But then what do? Everyone goes, wait a second. We've sort of have consolidated and removed some of those points. I think it's time to go price it again. So we price for the numbers that just came out, and then the numbers come out, we sell, and then we go, well, let's price for the next one, right? And for earnings. So again, we're probably pricing earnings in all these retail stores right now. That's probably what's going to happen. And then when earnings comes, we'll probably start to pull back a little bit. Maybe we may take profit right there with the earnings jump. Here's why I didn't buy Twitter. I know some of you saw it opening higher and you're like, fuck yeah, my stupid Twitter weeklies are gonna pay. Nice, good job. I mean, you're still in it. You're still in the fight. You're doing an Ali on the ropes. You know, you might be all right. I would just give it a moment. I mean, it's a trade I'll take. I've done this trade. We've done this trade before, right? We've literally done this trade before. Um, it's completely fine, but it's not going to be right now. Just wait, be patient. This is not an example of like last week where we buy on lows to go over the weekend. This is a 15% gap down. This is that's a lot different than something coming down a few percent in over like 2 days, right? This is a people are going to want to buy, but you can miss a point or two. It's okay, right? It's really okay to be missing a point or two. You're going to be all right. Be all right. Oh, we have Chegg earnings. Chegg earnings are coming. I think that's after hours, yeah. What those look like. I think for a lot of the COVID winners, it's gonna be very much about uh, earnings this quarter and whether or not they're gonna fucking grow or not. Like, think of Zoom. The most obvious question of Zoom for everyone is, is people gonna still fucking do Zoom meetings? Right now, we're getting answers from some of the largest employers, right? Of whether or not they're going back to offices or, but there's certainly questions. Um, I took this trade on Etsy. I've gotten stopped out now. I'm probably gonna buy this again. See, let's see. Probably buy this again before earnings. Not as much as an earnings play, but yes, in some ways. Maybe 191 here. Maybe 191, 190 and 191. I'm gonna be patient on that, but I do think it's important to be involved in this somehow. I think what we do is we're extending this out here. Let's actually not do that. Let's see. It's very much like the rest of these tickers that it's a mess in here, but I think it's gonna come down to maybe it just comes down to the support and then we take the trade. That'd be nice. That'd be a very nice pickup right there. Um, so let's look for that. We have Z earnings as well. This is where we talked about, like, over here. This is just, again, the continuation of a consolidation, but there's very obvious reasons to go buy here. The timing here is what sucks, and that's, again, this is going to be up. It will be up. That the timing is it's very specific. Um, yeah, it's hard to tell. Hard to tell. But it's just something that it probably should be done. Probability wise, I don't think you get hurt here. So I think you have to take a trade here. I don't know when I would take it. But I think you take a trade here that you can hold through a few percent of a loss overnight, right? You'd have to take a trade that you could hold through a loss. So it would have to be longer term. It would have to maybe be a little in the money too. You'd have to buy like 125s, or maybe not that low, but maybe that low. You just need something that is not going to get blown up over. I don't think it's intraday the move comes. It's all going to be gap. We'll see with something like that. I got to think about that a little bit. Again, the earnings, it's those kind of tickers that the earnings are going to play in with the possibilities of gaps or not, which we have to consider that with probability. Spot at the low here. I don't know if this is so much nah, I think we do take it on the low, but we had very good price action, and then again it turned into this mess, just a complete mess leading up towards earnings. And then earnings comes, it's a mess. This is like when we look at Twitter gapping down and then we're waiting a few days. Again, look at it takes a few days to get down here. If this reaches support today, I think we continue with our mentality of the best day to enter was yesterday, and we don't wait till open the next day. Again, generally the rule would be to a daily candle pulls into support, and then the next day you buy on support at the open. For some of these tickers, it's right now. I think you need to pull the trigger the day the day it reaches the support, and then you're doing that because it's likely you open a lot higher off of a buy. And I think we've seen things have been pretty technical recently. So something like spot here, if it comes down to 250, I think we take that trade today, whenever it happens, and then hold it overnight. If it just opens at the support, then it doesn't matter. You didn't lose anything. You're still there to take. You would have taken an opening trade anyway. But there's a much higher chance that the volatility increased and that IVs went up and the contracts went up. So again, it's probably cheaper and it's worth the risk of buying on the downwards move for the upside move. That whether it happens or not, it's still worth it. I think we take that. Upside still looking very good. Dow's entering all-time high right now. Again, value. Value first. Value first. Look at that fucking candle. Yikes. Yikes. Imagine. Again, I talked about this price action at the end of last week. This is very bullish pullback. And again, now look at you're up 2% today. It's easy to say in hindsight, but that's why I say it when it's fucking happening. That we don't have to run into those problems. That I'm a hindsight queen. I'm not. we again, it's not always easy to hold through that move there. From this trade here, it's not that straightforward. That's 11%, and then it pulled down to your trade turns into 6.5%, right? You're losing points. In 2 days, you lost 4%. You hold through it and you get paid for it. Banks, I mean, there hasn't been any questions on banks, but again, this is our from the whole year so far. These are our leaders, right? That's it. Not energy so much anymore, but again, it's that cycle is a little different, and it's very much around the oil price. So this has been very straightforward. And then again, the healthcare, the whole healthcare side. I don't know why this is always first. FI is still trending. I threw the TV chart in there again. I posted a TV chart right back here. Continue to consolidate down. I just extended our line here. This is a lot clearer. I've talked about this price action quite a bit recently. We're just sort of this it's like this confidence trading. When you get this, you trade into a lower level, and then you get a bid day that leads into trading into a lower level again, and it's very like quick. It's like 1 or 2 candles that it makes up the whole, or like 3 candles, I mean, that makes up the whole move, and then it breaks out of there. We have a lot of these confidence trades, and again, whenever you get those, it seems like we're really coming and taking out of those pretty well. These are the charts that I posted from the weekend. Wet as fuck, Wisdom Tree. I like the ticker, Wet F. I like that. Doing pretty well. Orgeo, we traded almost up to the trend line here. Again, a lot of bios that we're taking a look at. And then PBF, again, our weekly trade that's up 7% so far. This is interesting. Again, I mean, we'll see. This whole market and this whole sector is very much in the consolidation move. Some M&As. M&As look like they're on the menu. So that one's definitely a price action that stipulates some ideas. So again, when we buy something, I kind of talked about this a little bit. Generally, you do want to buy the company that's going to be bought. So keep that in mind. That's just disgusting. Again, anything on the consumer side, put some points on. MXK, it's on our other layout, the chart. But yeah, I mean, that's a straight fucking line. SPLK as well, transportation. Again, this sector has been very well. We saw it on the UPS numbers as well for at least the big boys. Transportation is very bullish. We've been trading this the whole way, right? Most of that sector. Retail stores where we've good trade, guys. Good job. You did good. You did good. Did good. Good job. You love to see it. You love to see it. We'll see how long this takes to catch up. Again, the ETF is a little slower. The ETF is a little slower here. We'll see how long. Maybe we'll get a little lesson on the benchmarkings here. How quickly it takes. Almost everything that should have made moves based on the economic numbers is certainly showing it today. I'm gonna chalk this up to a little bit of game theory by whoever's buying right now. I'm assuming. Let's see. I was gonna say because I bought on Friday on the dips, so but we didn't see anything after. I guess it's literally just some game theory that institutions waited for the economic numbers. It's like when I saw the economic numbers and I was like, I gotta go buy all the retail stores right now, and then I did, and then I had to re-enter them, and now that all the institutions are buying right now, they're definitely fucking with a little bit because they knew better. That was the beginning of the. That was on Wednesday. I would say. Hmm. Wonder what that means for the rest of prices. And the reason I'm saying it now because we're going to 10 o'clock and the prices are still going. It's not like we got the GPS move open, like Gap opened up bid and then it's continued. This is more bullish. Not it's one thing to get going and then it's another thing to continue the motion, which we're seeing across the whole thing. Interesting. Again, this was completely just economics. It was I have no idea. I talked about it because I was surprised last week. I was surprised about this move, and that's why we bought it. We used a lot of bias to buy this. Um, anyway, that's that's what you get. Next, we continue. Again, this has been pretty much the most straightforward Friday trade that we've had. You can see every single Friday candle. It's the low one. Pretty straightforward. And otherwise we've swung anyway, but we've basically bought every Friday. And yeah, that's been pretty straightforward. Again, the industrial side is again, look at what's moving right now. This is the Dow is an all-time high right now. Up 1% already today. And again, my whole portfolio right now is mostly value and I've just added on growth, but it's still mostly value and I've just held the same fucking position for over a month now. And again, the important part here to remember is that it's the points now that you're getting paid more for, even if your deltas are getting a little bit higher and you're kind of coming out of that the exponential part of your curve, right? Your exponential is coming down a little bit, but it's because traders when you bought did not expect price to continue on such a high right now. Again, this was our whole bet over the last month or so, right? That I keep saying is that we were betting on the price movement to continue and not to stop. It would be different this time, right? That's what I said a month ago. It would be different this time. It's different, and people realize it's different now, and so now people are paying the price. That's where those trades that we entered in a while ago, they turn into something completely different, and it's not so much a transition trade. You don't have to transition it because it wasn't expected to be a move in the first place. The IV wasn't even there, and now it's going, oh shit, and that's where again you get paid for these kind of you get paid for this idea now. This consolidation, you get paid for holding it through it. I don't know how many of you have been trading these. I know everyone basically switched over as well, but if this continues into all-time high and we get this trend here, that's the point that you get paid for holding through all that. Uh, again, it's mostly driven by things that we've sort of they're givens. It's not so much ifs; they're just kind of givens. And then we get confirmation. And again, I think the retail move so far today is proving a lot about the economic numbers. Um, we'll have to see. We'll have to see again. The dollar's making a move that's which it should be doing. We'll see how long it takes the dollar to come back down into this trend. I think we do have. Again, my theory from Friday was that this is mostly China switching over to the dollar to buy U.S. equities, which it looks like they're doing right now. They're not even. Oh, they weren't even open today, so there's no swaps. I guess this market's. I guess currency market was still. I guess currency market was still active. So this is now spending. It would be switch into the dollar, spend the dollar, is what that price action would show. That's what we do see. And then what do you spend it on? You spend it on, first of all, we did get some of this. You did get that spending that went to gold first. We are back onto our flow state of go from the dollar into gold and then into equities. You do see that here, which is important because I talked about that last week and I thought we would be into that and that we were at least going to watch it. This is interesting here. I think it is noteworthy. What's also noteworthy is the sort of the Bitcoin situation where we knew that Bitcoin was taking some sort of active demand from gold, but you can see how it's not really taking the passive flow out of it, where money goes pushed into the dollar, gets pushed into gold, and then gets pushed into the equity market. Again, that's because what are you doing if you're buying equities? You want to diversify it somehow, or not specifically hedge with a correlation, but you hedge with something that is contrary to what you're sort of doing, which is you're buying equities because of inflation. And so you buy gold because technically gold is good through inflation, right? And so that's what you're doing as a diversified hedge, right? And that's how we can, and that's almost how it always is, right? You're buying equities because you think equities always go up. So then you buy gold because you think gold always goes up, but it's opposite, right? They're not opposite, but they're contrary to each other. They contrast well. And so that's why people do that. That's why we usually can see this sort of price action where money goes into the dollar from a foreign sort of state. It's now in the dollar. We see it there for a little bit, and then we see it actively go to gold because what do? You hedge first. Then you put your position on. Why? Because hedging causes the price to go down of the other thing you're buying. It doesn't always have a direct effect, but it is a thing that we see. Same with the equity market when you do a direct corollary hedge. Let's say you want to go long on the whole S&P. What are you going to do first? You're going to buy the S&P or sell calls first? You hedge first because hedging will cause the market to go down if everyone was doing it at the same time. If everyone was hedging, prices would come down and then everyone buys it. That's the whole fucking point of pullbacks, right? And that's what we got back over here, right? And that's where we knew this was hedging over here, and then the price action started getting. Why? Because we're going into earnings. And what do? We are all very lazy and we're very stubborn, and we wait to hedge at the last moment. So right before earnings, we start to hedge. That's what people do. That's how we are. And that's how we always know that it's hedging, because it's like, what happens tomorrow? Oh, the start to earnings? Oh, I bet that's why they're hedging. It's not like 2 weeks before. Nah, let's fucking wait till the last day. Because that's when it's the cheapest, right? That's when it's the cheapest. And because, also here's the inside note. If you're an institution and you're hedging going into earnings, why do you wait until the last moment to hedge? Because everyone is already betting on earnings, right? So they're using calls to bet on earnings. What happens when you go dump a shit ton of supply on those? It sort of dilutes the price, doesn't it? Dilutes the value of all those calls out there. That's what you do. You increase the quantity. And it can cause some gamma reasons, right? So whether you're trying to devalue gamma, which it does, it slows it down. It would have to increase, demand would have to increase faster than the hedge is increasing, which it's never going to do in that moment, which is why prices will come down. But then it buys, right? And then everyone buys. And institutions do wait for earnings, right? They do wait to get some earnings to buy more. Just unless they know, which is like the company itself. It's like Google buying before earnings, right? Because they know their fucking earnings. Not illegal to buy yourself. Inside information on your fucking self isn't illegal. Like, damn, how can Google get away with buying 50 billion of itself before earnings? That's just fucked up. That's fucked up. I love that we're getting the candles like this. This is, again, the price action is not going to be intraday. This is about as good as it gets. Look at all these red candles. Small little bodies, right? Hanging out. Besides the Dow, let's be honest. Dow is all over the place. A lot of action. All right, let's take a look. Let's take a look. Verizon did come out with some things. Maybe we can speak about that a little bit. Verizon's selling Yahoo and whatever the other stupid thing is. What's the other thing they're selling? Yahoo and I remember. AOL. Yeah, yeah. Yeah, email me at Logan at AOL.com. Yeah, aim me. Remember aiming? I miss aim. Aim was the thing. Yeah, I don't know my screen name either. AIM was the thing. That's where I used to pick up the chicks. Right on AIM. Smarter Child was my only friend. AIM was great. Yeah, it was Discord. Yeah, it's a Discord ripoff. Maybe Microsoft will buy AIM. Microsoft's gonna buy AOL. I wonder. I mean, well, they already sold it, so I guess we already know. But the Discord going public thing will be interesting. So user based. AOL. I mean, I still use MSN, so I guess AOL's fine. I love my MSN news. You get to really know the authors of the articles because it's one author writing all the articles on MSN. Just one guy. I think I read something, or it was like a inside thing. I don't know if it was MSN. What was it for? It was for what fucking? It's one of the other dumb older websites. I can't remember. It wasn't like an Ask Jeeves or something. But I heard a rumor, not from article, but it was from when I was at work, that there are some celebrities and stuff that are ghostwriters that were ghostwriters for this thing. I think it was Denzel Washington. Denzel Washington's known to do some. Uh, he's like a gamer, and he's also like a ghostwriter for some things. I heard. I know. What was it for? I can't remember what it was for. I think it was Denzel. He was written for something. Yeah, Denzel is the man. That guy's a. That's how you do it right. Does it right. Think there was a funny. I remember a funny story about Denzel with Obama. I can't remember what other president it was, but they wanted him, and maybe it was um the president of China. Who was it? Was it the prime minister of Japan? Was a huge Denzel fan. He didn't even. I think when he became president, he wanted to meet uh just Denzel. So they went and had lunch at Denzel's house, and Obama came along, and they had an actual meeting at Denzel Washington's house, and his wife made them dinner and shit. He barely, yeah, it was I think it was Obama was telling the story. Obama was like, yeah, he just wanted to meet Denzel. He didn't even want to meet me. Went to Denzel Washington's house. This gold move continues. Neil, we're coming up to this 41 and a quarter. Wonder how much of a move we get here. So much of this is based on the options. He's back to the level. Looks like we're going to test that as support. That looks pretty good. It's a very good move. I'm very happy about that one. That's I think that's a very straightforward trade, but it's not. It's not so much. Hard to replicate those. Very in the moment. It depends. Don't know what Uber's doing. Is Uber at open or before? I mean pre-market or after hours? I mean, we had so much selling on Thursday and sort of consolidating still. I don't think anyone has very good. I don't know if it's contracting or based on what we've seen so far after hours. We have all day tomorrow still. Based on what we're seeing with retail stores, I'm almost wondering if this is like purposeful right now because it's very hard to find alpha, but if you know you're going to buy something because of good numbers, you wait for the price to get lower for you to buy it. And I wonder if we have dark pools getting full on, like when you look at this, I wonder how much was sitting in dark pools before it got here, like on Friday, and it got pushed over. That price action's very. That almost makes me think we have that on a lot of things coming into this week. You can't do that with things again. You can't do that with things like the Fang stocks. Fang stocks, you need to go open. You need to open exchange it and just go fucking show yourself. But for the smaller cap sizes, not that these are small caps, but they're not mega caps. You can go put your order in a dark pool, wait, get filled, wait, and then go send it. So if you're buying because you see the economic numbers are great, and so you're buying, but you're not buying on the exchange, and so people keep selling into you, maybe you're selling on. I mean, there's a lot of different ways it could happen. This seems very. It's yeah, a little choreographed. I'm just wondering if we're gonna get that with some other things here. Spot's coming up to low. We'll see how we do with that. Urban's the retailer that we're not really putting many points on. 2%. We're stuck under the level though. OSTK has continued off of that gain, which is there's been no take profit. Again, I talked a little bit about getting up to this level first very quickly. I do expect it. This can be a very interesting trade. This is not, again, I think I said last week, it's very difficult because once you get up to this trend line, what do? Do you take profit and then transition to something else? Or I think there's a This move was the dumbest thing ever because this is 100%. And when we took this trade, right, we waited, took the trade. This is 100% over here, and it doesn't look like it. And that was just as big of a move as it was over here. It was just a little bit lower than the all-time high over here. When we put this crazy move on, we took this trade. That's still such a sneaky bastard right there. I think a lot of people missed out on. This move is very similar. Like, I'll be honest with you, it's almost the exact same thing. And that's why when we got this, it didn't fucking matter to me at all. See what happened. Some of these are definitely turning into belief systems. Well, I believe in it. I think they're where's Lyft? I think fuck, I don't know if I want to buy these or not. I feel like this is so fucked. It's happening everywhere. I just don't know if it's a pattern that I should be buying on. And I don't mean like a pattern on the actual chart itself, a pattern across all these tickers doing the same thing. I feel like this is game theory. You just buy. I think it's like somebody starts to sell, and then the rest of the market starts. I mean, that's fucking one order, but and then you buy it for cheaper. Maybe at least for the options, it's probably some fucking hedge fund. You sell your underlying. Okay, ready? This is what you do. If I have a hedge fund, right? And if I had explained this move, or like this is not what happened, but this is very much like strategy that could be used. Let's say you own a bunch of Lyft stock, right? Hasn't been moving very much. Again, I'm buying into the Uber and Lyft right now. It's just too much. But you own a bunch of stock, right? You sell, let's say, a little bit of it, right? Maybe 25% of it. That's not a little, but let's say you sell 25% of your position, and the market starts to sell, and then it gains momentum. Maybe you sell a little bit more when it looks like it might be tightening. Sell a little bit more and push it a little bit further. And so the price comes down 10% here on Thursday, right? While that's coming down to the low, and when you know you're going to stop selling, you start to buy calls. You're buying an absolute shit ton of calls while everyone else is selling them into you, right? You're selling all your stock, so you're taking profit. You're taking profit in that moment and using that capital to go buy calls. And you buy an equal amount of calls. And then the price comes here and comes back to where you started. But guess what? You lost maybe, a few percent here from selling and causing it to come down 10%. You lost a few percent on your high. But then from the low that you gained here, you just gained like 100% on the options that you just bought for the equal amount from over here for the cost. So you just turn your position into a very winning position. That's how I would look at some of these. It's not directly that, but the forces that be can do that. They can do that. It is possible. It's entirely possible to do. So it's just whether or not you can actually influence price that much. And that's why I said you can't do it on the largest companies. There's no way it's possible. But you could certainly, with enough capital, do it on something like Lyft was just under 19 billion market cap. You could certainly do it here. You can see the Uber move. What is mark 104? The price is here. 10% on Lyft, 6% here. They're similar move, just not as large. So some of these things could be. And again, you can find a little play date. You find another little hedgy for you. Find a new hedge partner. Hey, buddy, why don't we go sell all our stock and buy a bunch of calls? Let's go. Let's call up Credit Suisse. Let's call up Credit Suisse to be our prime on this one. They give us 10x leverage for 10%. It costs 10% to go get 10x leverage. If anyone didn't see that I posted on Twitter, Archegos, Credit Suisse gave Archegos 10 times leverage for only 10% cost. They only made $17.5 million on Archegos from fees from Archegos the year before, and then lost $10 billion. $5.5 billion, but $5.5 billion loss on $17.5 million revenue from the year before. Imagine. They were that willing to give out credit to make nothing and lose it all. You can go ask anybody, any prime, for a nice little treat like this. So it's either dark pool or that little scenario. Fuck. We're doing pretty good here, boys. We're doing pretty good. A good start to the Monday. I love making money on Mondays. Really makes my week feel good, because then I know I can just fuck off the whole week. Not that I'm going to. I just mean that, isn't it nice to just make money at the beginning of the week so that, you know, if something did come up, you can go, I made money this week already. Maybe take a little bit more chances. Okay, let's take a look. Bob is now on the 13th. We're doing, again, I held through this move. By the way, I told you guys this. I held through this move from this entry here. The 229er. Billy's still coming down. AD looked good. EDD. Let's see. Tomorrow's gonna be interesting. How aggressive. We have some UK. They make rate decisions on Thursday. I don't know how much that's gonna matter, but it may influence the dollar. So it would. Don't know if it would push the dollar down. The XRT started to sell. Already took care of that. Let's see. Anything on the sell side we can take advantage of. There's W. I don't think I want to touch that. I think again, I'm going to use Etsy instead of this. That's OKTA on 262.5. What is that? Probably can wait. Probably not going to swing back immediately. That's probably an open wait. We'll wait for open to see. That's here. Chegg is interesting. I think we wait. Earnings is the after hours. We'll wait for that. Take a look. I don't really care so much about growth. Like some of these other growth tickers, I don't really care that much about. They're just sort of all similar, and I'll just trade the more bullish ones anyway, right? So anything on the sell side, I don't really want to buy growth on the sell side. I want to be buying those on obvious momentum moves. Semis, let's see. QRVO on support here could be pretty fun. If maybe with this though, with converging supply, how don't know how strong this really is. This might be it right there. What does the log look like? Fucking up there. Or if something like this is. Let me see. Oh, actually, this comes in. This does come in on the intraday though. Maybe we'll test something like this. Let's see what we can get here. Let's test a short-term play on this one. The test. Pretty low volume. A little spin. Goodness. Okay. Let's do this. Let's put the cards on the table here. I think it's a good test to try out. I'm going to try buying all these semis right now. 1025. I'm going to try to buy them all in the support right now because I have all the supports across the market. Everything is hitting support at the same time on every single one of these tickers. I'm going to buy all of them. I'm going to buy them all. Use SMH and then buy AMD, QRVO. All of them. I've already sort of been positioning on these, and we've been taking them, and we've gotten swings on the last play. Worst case scenario, we get another little swing. Have to get out of it. Throw an INTC in there as well. We'll give it a little bit more time on INTC. Yeah, I'm gonna buy all these fucking things. Where's this? I don't know if I want to buy that one. We'll leave AMKR out. TSM is also in a different spot here. I'm gonna, you know what? I think I'm right. I think I'm right, so I'm gonna buy all of them. UMC, TSM, AMD, INTC, QRVO. NVIDIA is also what I already talked about, but I'm already in this position. But the same thing applies. This is about as tight as you're going to get on this chart. And if this is tightening in the way that I'm thinking of, like I talked about this morning, then this is your play. The earnings is AMD has already had the earnings. We have NVIDIA coming up. INTC we just obviously we just had with the gap here. We're sort of past the earnings that were negative, and now we're going into sort of a different time. So there's time here that you're not getting affected by earnings or anything like that. So should be we're already past it, right? We're already past them all. NVIDIA's the only one. NVIDIA's the only one, and actually, NVIDIA would be the one that's going to have good earnings, and that's why the price looks as good as it does, right? NVIDIA's the only one that doesn't have this fucking sort of bad price action. Probably because everyone knows it's going to be pretty damn good earnings, right? Why else would the price action look so good, right? So that will be our sector for the day. See how we do. See how we do. If you don't have enough capital to buy everything, I don't think it matters. I think just one of them is fine. It's not company specific. It's very sector specific. I'm just getting exposure across them all because I actually have no fucking idea which one moves the most. and I don't have time to do the math. You could be like, well, which one of these options is gonna net the most profit and which one costs the least? Like someone out there is doing that right now, but by the time they figure that out, what the best options would be across all the different semiconductors, and maybe they did it over the weekend, but then the prices changed this morning anyway. So they're out there on their calculator and they're Googling, what does this mean? What does that mean? And fuck that, just buy it all. Who cares? Am I fucking broke? Fucking buy them all. They go up, they go up, they go down, they go down. What prices do. But if they go up, I make money, so. Yep. This is fun. This is fun. I do like the retail store move a lot. I do like it a lot. I find it very interesting. People are playing the game a little bit. They're playing the game. If the Dow comes back into all-time high at close, that'd be interesting. I don't think we're getting intraday movement though. There's no intraday movement again. This is all going to be after hours and See what the bank move does here. BAC holding that level is pretty good. Looks clean. Is there anything else on the sell side? Oh god, something like this just screams to be bought. We did very well on this move. I wasn't in here anymore. I got out back over here. I'm gonna think about EL. Maybe by EL on that support, it held the support after the gap, which means there's obviously it's support. Pretty clear. You don't just open and then fucking immediately stop right there. This is probably wait though. You probably wait. You're gonna wait till tomorrow, so I'll wait till tomorrow to look at that, I guess. Wait till tomorrow. But it looks like that held. And then again, our biggest question is still on clean energy. What exactly are we doing over there? When do we enter? I don't know. It may be the thing that I'm starting to warm up to more is the sort of the negative correlation with oil in that cycle. It may be negative correlated to that. Pretty I mean they're pretty opposite. Pretty opposite. Neo's testing that level again. I would like for those to come out of here today. Tesla stopped, but we're not expecting much intraday movement anyway. Still fine from the entry for sure. AD's starting to pick up here. Definitely be nice. Get this goddamn China bet to work. Decent. Decent. Just hold it. Just hold that 2% for me. Almost back to where the high was on those options. Almost back. Oh, baby. If we could get this China move. Just for my own mental. Don't want to be wrong. Maybe wrong. Spot with the doji. PE still hasn't broke that level. Okay. I think we've seen most of it. It's past 10:30 now. Again, we're seeing a lot of dojis around, and it seems like most of the price action came in. We do have something still. Everything on the consumer side anything that would be directly linked to consumer spending is is what's fueling everything right now. And so we are seeing that. I would love for Netflix to do the move I talked about because again, this is the silliest thing that we can keep doing, and it it's exactly why I talk about the earnings not mattering in a situation like this, where we just swing back up anyway. It matters in the sense that we do the same fucking thing every time. Just it just depends which side of the supply you're on. You're at the resistance, well, gap down. You're at support, gap up, and then we trade right back to the other level. It doesn't matter. Yeah, our pet move does. I like everything we got. I really like all of our positions. I don't feel I like our PG. I think this is a very good trade as well. Um, I think this embodies a lot of the economic data pushing something and why we take a trade like that based on data and then how people react and also the way in which momentum starts to work. This is a very nice trade, I think. Checks a lot of boxes. And then things like PEP and K that are more on this again, we've talked about this food and beverage sort of idea with the consumer spending side, along with how transportation's affected with that. And we've noticed a lot of that and how we did well with a lot of these ideas. I think this is still, I mean, there's not much else to see here. Some of these price moves, I was going to switch over to the other layout so I could show you the trend line I have here. We're right there. But B comes up to the trend line. It looks pretty good. I'm not seeing IVs really change. Volatility is not really changing much on anything. It did change on retail stores. Travel hasn't changed much. Hmm. Okay. It changed. Nokia is still holding that level. Cute. What has been going on over here, by the way? WBI. It's going to zero. Going to zero. You see how we keep going here. Let's see what this order's coming out of nowhere. We had a lot of action at open. It was hard to tell what exactly was happening. Looks like the same. Like the same spread. Someone's buying the whole spread. Someone's buying the whole spread on CCL. That's why you see see how these highs and lows are connected on this trend line right here? Like this. That's someone buying the whole spread, no matter what the price is. So they're buying the highs and the lows across the whole thing. They're willing to pay for the whole spread. So you get a position pretty quick. This isn't that much. But 1%. But 1% is a couple dozen millions. Means. Then we had this whole thing here. Wasn't that much volume. There's definitely some hungry. Why was that not deleting? There's definitely some hungry hungry funds out there. Definitely some hungry. Are moving opposite. Oops. I think there's a lot of waiting on this. A lot of waiting for earnings. Was this? Wonder what these look like. I think I might add to my. I'm gonna add to my positions. I think that's what I'm gonna do. So right now, right, I only have this sort of shorter term structure on travel because of the volatility involved with it. But I think what I'm gonna do here, and I don't have much capital pushed onto the casino side. I have these trades from about the same time. About the same time as we took the airlines and CCL trade. Wonder if I should add more to short. Like MGM here reacted negatively to earnings here, but I think still what I've been saying is that there's a lot of the same price action that's it's on the underlying and it's not on the option side, and the option side's getting bought. I think what I'm gonna do is buy more win. I'm gonna use that as my ad for the earnings here. But I wonder if I should do longer term or just play the almost play the earnings, but avoid the contracts that'll be earning play contracts. Find something with low, maybe not. Maybe find something that is not IV dependent, even though that's impossible. But find something that's not being bought for specifically earnings, but so that we can bet on this going up. I think we're going to get a move here. I think there's a lot of... Like, we've done well on this move so far. Airlines are holding, doing fine. I think it's going to get faster. I'm going to play win a little bit here. Go for the win. If we get a win here, I'll go to the win this weekend. The weather. It was too nice here in New York. I was thinking about leaving for this weekend, but last week. Oh, it's going to be a little bit... Weather's not going to be as good this weekend. I'll go to the win this weekend. What's it in Vegas? Oh, Vegas is not going to be as hot on this weekend. Perfect. See, last week it was like 100, and it was nice here in New York. It was beautiful out. Anyone here in New York fucking was beautiful this weekend. Holy moly, finally. Except we had this one, I think it was Saturday, was windy as shit. I was trying to run in Central Park, and those of you that don't know, so you've got so in Central Park, you've got the horses, right, that you can take a horse ride, and they just shit right on the street, right? And so they take a poop right in the street, next to the path you run on, or you run on the road next to the horses that shit. Now, when it's windy, there are these guys that walk behind the horses and they broom. They have a broom and they brush the shit and they pick up the shit, right? But first, when they don't just scoop it, for whatever fucking reason, they have this big broom and they push it. And you know what happens? All the shit goes up into the air like dust when they're trying to get the big shit. And so if you're running on a windy day, right? So here I am going for a nice run in the park. It's beautiful out, but it's windy. I'm running by this guy that's brooming the shit, and this shit went up in the air, and those particles were all over me. It was in my eyeballs. It was just shitty. It was very shitty. It was not the greatest. It was not the best run of my life. That was for sure. It was a shitty run. Right in my eyeballs. But it was beautiful. What I live in New York for. Get nice trash and shit. You know what the worst is? Oh god, guys, I gotta tell you. I get this Benihana that's near me, right? I have to walk by it. I'm going to the park. It's also like right near where my apartment is. Not directly, it's a street over. That Benihana smells like shit, guys. I've never smelled the Benihana smell. I was like, I don't know how you guys can sit there and eat that shit and then smell the shit. It stinks out there. There's so much construction and everything over here. Big fucking cranes here every day. Mess over here. Inflation. What it is, inflation. The smells, the construction. Inflation. Also, if you guys want a good business idea, you should get into the garbage business because New York really needs you. We really need some new garbage trucks. So I think it might be time for the mob to come back. And we might just form our own. It's time to bring back the mob. We need some trash trucks out here. I think it's just Jersey's big FU to us by not bringing their trash trucks over. Could really use it. Disgusting. All right, where are we on LMT? We're doing fine so far. Wrap is just launching us, FYI. Launching. Again, look at this chart. Does it look normal? Is it something off about it? Probably, right? What is all this? What are these lines that I draw on here? Really makes you wonder. starting to pick up on oil again. Be nice. Here's crude's breaking back through the level. Breaking back out through our trend line here. This could be a fun lunch. This could be a fun lunch. We've been getting a lot of momentum both ways. Upside, downside on oil. Went out of the low here from last week, which helped a lot, like I was talking about. This is just bullish. Have to start to wonder about some take profits on some of these things that we got for the oil side. At least not like transition ideas, I think, for some of them. Really unclear. The math is not good. Gonna be opposite. Getting our first swing on the day. That's 0.5% there. It's funny how many points we've put on in some areas. It's quite, again, we have quite a bit of volatility even though volatility's at 0. Volatility's at 0, but we have a lot more IV in the market right now. We do get these pretty big price swings. This should be interesting. Again, it's the growth side. It's the growth side that's moving, and this is the more interesting side because it's the most dynamic, and it is the side that we have to react to the most. These are certainly anything on the growth side is certainly the side that we're swing trading, right? We're quite literally swinging through these. We're trying to push them, but when we have to swing them and take, so like even something on Amazon here, it's very, you know, you got to start to crunch. Where exactly are you? If you entered over here, where exactly do you exit and transition? And it's not clear, right? I would say this is the level and it holds us. 34.34, I would say it's going to hold right around here. What's this high? 34.32. I would say it's going to hold right in here. But these sort of things, right? We do need to, you need to have plans for those. And that's why we keep trying to find the next thing. On the growth side is always about finding the next one. On the value side, we just try to, obviously we're much more trend based and we're not swinging through, but this candle structure here is usually that would be my take profit, but I have a longer term bias here, so it's completely different now, but that would normally be around here if this level here broke, right? This here. I think everything holds on. Everything holds. Well, we're certainly seeing a very big shift in wanting value right now. Very clear. It'll be interesting to. It'll be. I mean, like, look at retail stores, right? Disgusting price action. So it'll be very interesting to see some of the active trading here today. See what it sums up to. And by the way, Urban did break through here. This one I had the most questions on if that was actually going to break through or not. This is a lot of points. If we get up to the trend line, that's a lot of points. Some of these are begging for some transitions pending. Still, we're up almost 0.5% across the whole shebang. Qs are down 10 basis points. Dow's up almost 1%. Small caps, again, hard to read. Still up though, up 20 basis points. Hard to read though, on this average at least. Bank's up 0.5%. Industrials are up a lot. Healthcare's up. Here's up a lot. Retail stores, so again, value, value, value. But imagine, oh, disgusting. Bitcoin. Still. No idea. I have no idea how some of this stuff is gonna work, to be honest with you. In the So this is the, let's see. There's July. Rate. Oh, rate. Let's see. It's November. Let's do before a little bit. Include September. Include this right there. That's the Ethereum compared to Bitcoin on the 3-day log. Oh, that's percent log. Here we go. Maybe we can't log it because of the use percent. That's what I meant. There. It was correct. Okay. That's percent gain. Bitcoin and Ethereum. Now, Bitcoin is 50% of the market. Here. And then over here, it's what? 80%? 90%? 75, 50. Let's see. They look exactly the same. It's like the comparison between a small cap and a large cap. That's kind of what it looks like. But maybe this is the point. This is when it got disjointed. It got disjointed when coin went public. Put the tinfoil hats on. As soon as coin went public, Ethereum and Bitcoin started to split. As soon as Coinbase went public, they started to split. Ethereum started to continue its breakout, and Bitcoin started to come down, and at least not continue its trend. So, tinfoil cap would say that those are directly linked. Look at that. It's clear as day. I don't know how much it matters, but I think the most obvious thing is the institutions. Institutions are not trading Ethereum, they're trading Bitcoin. And Bitcoin looks very much like again, it looks like fucking institutions are trading it. And then Ethereum looks like retail's trading it, right? That's literally the difference. In here, you're getting price action. You're getting consolidations, right? Right over here, I talked about it. As soon as we got this consolidation, I knew we were getting institutions. And that's why I said over here we changed up our tone a little bit. It's institutions that will consolidate prices in a very sort of technical way without much rowdiness, without without sort of randomness and chaos, right? Retail's a lot more chaotic. Retail will just continue to trade things on momentum nonstop because they're fucking afraid, and you can see that through the spread increasing. Demand stays the same, but the spread increases. Why? Because they're fucking chasing. Over here, you don't do that. When you get the big boys playing, they play the game the traditional way. Then you look at fucking Ethereum, it's just gone. Retailed out of its mind. That's XBT, but it's fine. Same thing. One way street. We'll see how these do. We're right on our supports on our semis, which is perfect. We'll see how these do. A good. That's the spot. We either bounce or we don't. We either make money or we don't. Who would have thought it was so binary? Who would have thunk it? Too busy winning. Money do we have here still? Looks like we still have a lot of money to put into equities. We'll see what this move. Again, we should see gold reach its peak, equities reach its low, and then the money goes from gold into equities. What that looks like. Retail stores are holding their value too, which is oof. A lot of points. Whole lot of points. Be interesting for lunch. Very interesting. Some of my questions go to how many points do we? Some of these things that are like we have so many things that are up quite a bit on the value side. I wonder if those double up by close. There's more money coming in. Dollar coming down pretty well. It'll be fun. Neo, still under our level. Tesla, hanging out still. Consolidating at a low, though. Ford, nothing. Here, give me one moment. Yeah. Nice. Nice spread right there. Retail stores are still going. They're still going. Like OSTK is going to put some more points on. Yeah. Very good. Followed by his Verizon Media assets. And All right, what do we got on TradingView today? Let's take a look. Think differently about inflation to recognize opportunities. Cute. I think it was great until I had to read this sentence. But the long and short of it is that food is up. Oh, wait, not that one. That's not what I meant. Where's the comment? That's not what I meant. Where is the comment about shorting tech? Short tech, because yields rise. Yikes. It is true. We haven't had any inflation since QE started in 2008, which is exactly contrary to everything that we know, which is why they're continuing to fucking do it. I keep seeing things coming out about how the Fed should pump the brakes and wait to see the data. It's like we started QE in 2008, and there's been no one. We haven't even been able to get inflation to 2% since then. We can't even read our. We can't even reach our sort of our mandate. When you look at the numbers, yeah, they don't fucking tell the story. Nothing fun today. Nothing fun. We've got through most of the price action. I'm not sure we have anything else to see here. What this turns into, again, we're 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 up quite a bit on the overall. Growth is definitely taking some profit from the highs, but this doesn't equate to much. It doesn't look weak, at least. Doesn't look weak. I'm not sure how much we need to talk about, look at here. How much intraday moves? We've seen some significant gains continue to get put on some of our value trades. That's what matters, right? we're watching the overall market, but again, the averages don't so much matter when you're trading velocity on other individual ticker sectors. It'll be interesting to see what happens with semis. Putting those bets on today. The retail bet from last week definitely paying off right now. The continuation of holding value is the majority of my portfolio is working out. Still watching for Bitcoin, obviously, see what happens there. The oil trade, banks, all looking great. Some of the growth tickers that we took with the mega caps still looking good. So even though again we're seeing some of this short-term sort of pullback, it doesn't tell us or scream at us to get out of a position. So we're holding everything. So everything still looks good today, even coming into Monday here with a lot of demands going outside of growth. They still are holds, right? We're still holding here. On the flip side, they would be buys if you're not in. So everything, and I would be buying value before, but if you had the capital to go buy them, then for sure I would be buying these still. So everything looks very good. The dollar's still pushing down. Chinese tickers look good, so China wasn't open, but we look pretty good over here. We'll see what these turn into. I'm not gonna watch much else here. I don't think there's anything else to see talk about. I did put Uber and Lyft trades on where I'm basically now at break even. I might get stopped out of these by the end of the day, but I am gonna look to put these on. And I did also add to my win position. I have basically all of travel on short terms, and then I added to the win position going into earnings. We'll see what that turns into, but yeah, there hasn't been much else to look at or see. And look, it was a great Monday start here for the week. I'm very curious to see how we do this week and see if we gain that momentum to the upside. The opening definitely stimulates that thought. There's no way around it. It doesn't matter. Again, this is where it's very easy to see the price action right now and to remove what has happened since the open, right? Where we've pulled back a little bit here in the market. This is where we're using a bias to remove that, right? Just remove it from your mind that unless it continues, right, and it finishes off the whole day that way. This is where we don't look at intraday movement too much, other than harnessing it for entries, right? Beyond that, we kind of look past it. And not to say that if something is coming into a level where you need to get stopped out or you need to be taking profit, transitioning, those are different situations that are dependent on your own position. So we'll see. Let's take a break for lunch. There's not much else to see here. I'll see you guys this afternoon. Depending on price action, maybe it'll come on a little bit earlier. We'll see. I don't think Powell speaking is going to do anything, but I am curious to see what he's going to say. We'll see if yields do anything. The bond market has not moved today. So there's been basically no one's done anything since the open. So everyone's basically losing volume. So I'm expecting some action at close. I'll see you guys at close. So enjoy your lunch. Have a good one.